having this upward spike here. So yeah, so I guess let's get started, get the show on the road. So before I jump into this, I do want to make clear that I'm not a financial advisor. This is a gathering of crypto enthusiasts, personal finance enthusiasts. We're just sharing ideas. We're just sharing about like what is happening in the space. We're sharing about our thoughts and our opinions about like what is happening, and even the main theme for tonight is on how to plan your exit strategy, because this is something that we do need to have in place, because those who had an exit strategy, they already gotten out at about like 50K 60K already, and they actually are buying back in like during this dip. So it's important for us to share our strategy about like how to do it and inspire one another to get started. So yeah, so if whatever you want to do, you are doing this on your own accord. We're not financial advisors. We're not financial professionals. So yeah, and also remember to do due diligence with whatever you do. So yeah, to start off, I do want to do a quick news roundup, because for this day, I've been looking around, been looking at the different news stories. I've been looking up different influencers to see like what they are doing, to see like why like did we have this dip today, and how far this dip would go. And then next up, we'll do the main component where we talk about crypto investing plan, your crypto exit strategy, and then finally, if we have time, we're gonna have crypto analysis, where we can look at different coin predictions, and then we're gonna wrap up. So to start off, let's go over some news, right? So you may have heard about this news right here, right? About how China said they are banning financial payments institutions from cryptocurrency businesses. So there's a lot of people are attributing this drop in the price of Bitcoin to like this China ban, but the reality is this ban has been in place since 2013. It's just Reuters taking old news and repackaging it into like a news story to cause FUD. Like I've looked into this. Like it has been around for a while. This ban has been around for a while. Every couple of years, like China will make another announcement saying they're gonna ban something. So yeah, don't like give into this type of fear, uncertainty, and doubt. They are just trying to get you to sell your crypto, right? And some people are saying that this could be a coordinated attack by different like whales out there, like whales who have control of who have a lot of influence and control of the media. And then they also may have heard about like Elon Musk making his comment right a couple of days ago about how he thinks that Bitcoin is causing a lot of environmental issues, is using up a lot of coal and energy, but I'm pretty sure he knows ahead of time. Right? He knows ahead of time that about this issue, but he bought into it like back in April, March, and February. So people are calling him out. Their whole crypto community on Twitter, on the social media, they are calling him out for trying to spread FUD, trying to like get attention, get more headlines, and yeah, and then now you can tell that he is trying to like stir up the pot by talking about Doge, right? And some of you may have been lucky enough to have gotten a bump in your price of Doge, and some people are looking into like why is he doing it, and why is he like stirring this up? Like, is this even legal? And according to one influencer, in his video he mentioned that what Elon Musk is doing, if he is not buying or selling Bitcoin, he like the SEC can't really put up a strong case against him. And for Doge, because Doge is an unregulated, it's not regulated, it's not even like deemed as a security. It's actually open season for him, and some people are suspecting that Elon Musk may be like stirring up the pot with Doge because he has a chip with SEC. If some of you may remember about Elon's tweet about how he wanted to take Tesla private, and he got into trouble for that. So now he is like causing a lot of trouble with a non-security. And we don't know how this may go, whether SEC may change the rules just to get at him, or something may happen. But for now, there's a lot of volatility, and in fact, there's also this guy. He said that like Elon Musk is probably like the biggest troll out there, because usually trolls, you know what he's doing, but with Elon Musk, he's like the type where like you just can't tell what he's doing. Like one moment he may be like all for crypto, and another moment he decides to backstab it. So be careful out there. And sometimes I'm like sticking to like blue crypto or blue chip crypto, right? Maybe the safest thing to go about. And then of course, whenever like Bitcoin dumps, you also have like institutional guys like making like news announcements, right? Press releases saying, "Oh, we're dumping too." So this further supports like some of our concerns that this may be a coordinated attack. You have like JP Morgan, you have like some people from China, you have people from India. Like they are like funny. Notice how like it's only like we had like a couple months of where there wasn't a lot of like bad FUDs, and then all of a sudden this week, after Elon Musk made his comment, all the FUDs, all the bad stories like just started coming out. So we do have some people who are suspecting that this may be a coordinated attack. That whether this is the institutional guys wanting to take down like Bitcoin, or maybe like the institutional guys are wanting to get in Bitcoin at a discount, because Bitcoin was at about 60K before. And now they are able to get in at 50% off just by sending out all these news stories. And yeah, if you knew, FUD stands for fear, uncertainty, and doubt. So yeah, and this is one of the tools that they're doing. And some people, and I can also share with you another article right here, right, about how BlockFi this morning, right, they made a mistake of sending out, instead of sending out US dollars, they sent out like Bitcoin. So instead of sending someone like $10 for making a referral, they sent someone 10 Bitcoins. So you could imagine how like this is going to affect a lot of things, right? Imagine like you are checking your phone, you're checking your BlockFi or whatever app you're using, and all of a sudden, instead of them giving you $10 of USD, they give you like 10 Bitcoin. Well, the honest thing to do is you should be telling them about it. But there are a lot of people who thought that, okay, I'm going to take this money and I'm going to run away with it. And that's what happened. A lot of people took this money. They've withdrawn their like this Bitcoin that was mistakenly transferred to them, and they took it to the exchange and sold it. And when you have like thousands, if not hundreds of thousands of like Bitcoin being sold, right? You're going to see what we're seeing right now. So there's a lot of selling pressure, people trying to get rid of the Bitcoin that they weren't supposed to have in the first place. And with all these stories all together, right? I think that's probably sufficient to create a perfect storm to cause this massive dump for Bitcoin. But it's not all bad. We also got some good people who like try to like shine some light, right, and try to help Bitcoin, right? Like Kathy Wood from ARK Investing, right, and a venture fund. She made a press release telling people that she still believes in Bitcoin and that it has a chance of going to like 500,000. Hopefully, that is the case, but there is a lot of people who are suspecting like manipulation with these stories, and they are questioning whether this positive story is sufficient. And then this is another one too. Another story I found on this was from from an anonymous website known as 4chan, where anyone can post stuff, right? And somebody posted this like sometime yesterday, I guess, almost like 12 hours before the dump, right? About how this guy claims to be an insider, like working for, I guess, some banks in China, and he got the scoop on people wanting to create a coordinated sell-off. And he mentioned about like 7 a.m. UCT, but it got pushed. It didn't happen. Right, it didn't happen at that time, right? It happened a couple hours later. So whether this is true or not, this is something we should be aware of, that just because the hodler. That's because the masses are able to coordinate pumps, right? You may remember like GME GameStop pump, right? Or Doge 420 Doge pump, right? Nothing is stopping the institutional guys from doing their own like coordinated attack on like on dumping like crypto, or even I'm shorting crypto all at the same time, as crypto is a non-regulated space. Any of this could happen, and unlike the stock market where you have circuit breakers and such, here in the crypto space there's no circuit breaker, and the only thing closer to a circuit breaker is your exchange going offline, and that doesn't stop like the price from falling down because other exchanges that can still be selling. So, and we actually had that too. I actually didn't get the story for that, but I didn't post a picture of the story. But a lot of exchanges, a lot of services, like they actually went offline during the dump. Like Coinbase went down, Kraken went down, I think, and a couple other exchanges went down. So like that, like multiplied this fear, uncertainty, and doubt. People thought that this was the end of crypto, and they were like either selling it at a loss, or they were just rage quitting, right? And yeah, and my condolence goes out to those who sold at a loss, because shortly after selling, right, after Bitcoin dropped down to, you can see right here, right, Bitcoin had this massive red candle, right, with this candle wick that went down all the way to 30K, right? After it touched this 30K point, it started moving up. So my condolences goes out to everybody who sold here and anybody who got liquidated along the way, because a lot of people I know, they were like using margin trading. They were like doing leverage trading and margin trading and borrowing to trade, right? This is saying that I borrow to invest, right? Yeah, it works when it's in a bull market. It works when it's going up, but when it's going down, your 4x leverage like means 4x loss, right? So be careful with that. And yeah, so Bitcoin was here. Like if you look at the highest point, all-time high we had right here at about like almost like 65K, right? This huge drop down to 30K, that's around like 53%. If you're an ETH, right, Ethereum dropped from like 4.4K all the way down to almost like just a bit under $2,000. And I think leverage trading had like play a big role in this. Like usually when you see like these waterfalls right here, right? Usually means that somebody like the whales and whoever's been manipulating, right? They place like sell orders, right? Just to bring it down here. And then you have people who have like stop losses, right? Stop losses all the way down, right? So they trigger all these stop losses, and these stop losses usually consist of like sell orders. So you have these people who are like, you have whales who put up a big amount just to get the stop losses started, and then the stop losses start dumping, and you have someone who has like 100x leverage, right? Like 100x leverage long, their stop loss is going to be like, yeah, it's going to be quite a lot too. So, and usually in the leverage space, people love trading with like a 2x or a 3x leverage, and with 3x leverage, right? And with something like a 56% drop, 50% drop, all the 2x people got liquidated. All the 3x people got liquidated from the top. And even if you start in the middle at a 3x or 5x leverage, you would have gotten liquidated as well too. So yeah, so it is very vicious out there. Like people, unlike the fiat space, unlike the equities market, people don't play fair in this space, and you have to protect yourself. So be careful about that. And yeah, so and then I wonder, I'm going to share not this, but I'm going to share this screen right here too. So if you guys are not familiar, Bybit is a website I love to go for, mostly just the market data. I know some people go here to trade, but you can see that just over the last 24 hours, we got like $9 billion liquidated. $9 billion liquidated, and also like almost like 1 million people, like 854,000 people were liquidated. So all of these people got wrecked just in the last 24 hours, just because of remember how I was talking about these liquidation stop losses. So they got liquidated. They got the stop losses trigger. They got liquidated, and so yeah, the space is quite dangerous. I mean, like people can get wrecked like this. So yes, and then this shows like all the different coins that got liquidated, right? So a lot of ETH holders got liquidated. A lot of like BTC holders got liquidated. So and Doge, finally, got liquidated, and then like XRP and all these other coins. So yeah, be careful out there. And like, and this is the reason why I do tell everyone who is new, if you're new, like don't do leverage trading. Like if you don't even know how to trade, you don't even know how to how to set up stop losses and such, right? Don't even bother with leverage trading. Like I know it sounds exciting about like, oh, at a 10x leverage, if Bitcoin goes up by $100, you make like $1,000. Yeah, but you also lose $1,000 if it goes down $100. So yeah, so I mean, like be educated, be informed first before you even take on like bigger like risks, right? So now I'm gonna go over to the main part for tonight, right? Where we're gonna talk about crypto exit strategies, and I'm going to open up. A chat right now. So feel free to type in the chat about like what do you think are some good exit strategies? Because clearly, like if you exited like around here, right? If you exited like anywhere like between here, right? Like you're much better off than like the person who's hodling right now, and you can even like take what you exited, right, and buy back at a discount. So, and yeah, it's too late to exit right now. But this is why we do want to plan like plan like strategies on like how do we want to exit like if Bitcoin, if the crypto market space recovers and it continues on, if Bitcoin goes up to 100K, right? Do you have an exit strategy? Because the worst thing you want is to ride like any of your crypto all the way to the top to 100K, 200K, and then ride it all the way to the bottom. And so yeah, so feel free to share. So I see some people who are saying sell high always. Yeah, it's good to sell high, but it's also important to have a target as well too, which I think we do have Aaron who said when your target is reached. So setting exit targets, setting targets, that's a huge thing. That's setting sell targets, sell targets. And then we have a high that you come back, you FOMO back in. Yeah, it is a common problem too. It is a common problem to FOMO back in, but this is why you need to have a plan. Once you set a plan, you also need to set a buyback plan, right? A plan on when you want to buy the dip, right? And then yeah, these thing the C is like buying, right? So maybe it's like the dollar profit average. So you average your way in, right? Or average your way out. Your exits out. And then selling for tax harvest, that only works if you are at a loss. And also if after you sell, you can't really touch that asset for like 30 days. Otherwise, it will accuse you of wash trading, and you can't really use that against your tax losses and such. And then let's see what else we have. Should be setting limits, right? Setting sell limits. Yeah, that is a huge thing. You want to set sell limits. And then here's an interesting question for all of you guys to think about. So in terms, especially for those who are thinking about like setting targets and setting sell limits, the question I want to pose for you guys is like how high do you want to set your targets to, right? Should you set your targets to like 2x of what you put in, or like 4x or 10x or what. So feel free to type in the chat. I'm just going to type out like exit strategies. I'm just going to like just crowdsource a bunch of exit strategies. So we have like take out original. So amount at 5x. That's a fair one. Take out original at 5x. At least you get your capital back, right? Because when you have a position, your capital effectively is locked. So like you do want to ask yourself like how soon do you want to like get your capital back so that you can play on the house's money, right? Because in the stock market, it moves a lot slower. So some people will ride it for a while, right? But in crypto space, a token could double like in a matter of months if you are on the right one. And then Andrew here just said like it depends on the buy-in price, and absolutely, it's so true. Like you do want to look at the buy-in price to see like how much you bought it in at compared to like how much has it gone up by. Because if you got in if you bought in a coin, right, that has gone up by a lot, you've got like a coin that has gone up a lot and you bought in right here, the chances of it doubling is not really that a lot, right? In fact, there's a high chance that it may start like plateauing here. While someone who got in at this stage, right, they just made like 10, 20, 30x, and they could be dumping after you got in. So we have Bill who said 4x or 5x buy-in would be ideal. Yeah, I think 5x could be one. I also know another common one is you take out your like capital at 2x. So if it doubles, you sell 50% so that everything above is the house's money. So that's another common one too, I hear. So I guess I take our original amount. So that it's about like 20% at 5x. Yeah, so feel free to share any other strategies you guys have that we can brainstorm about. So like Dave just said the 10, 20, 30, 40 strategy. I think that is from LEO Trade Crypto. So this is like, if you're not familiar with 10, 20, 30, 40, it's basically whenever your token has gone up by a lot, you usually have to set a target. Maybe like if it has gone up by say 5x, right? You take 10% out, you put it into BTC or ETH. Basically, like your 10 and 20% should go into like BTC or ETH, basically blue chip coins, right? Depending on which one you believe is going to be better. For some people, they believe in ETH more than BTC, so they put 20% in. And then you also want to keep something called a moon else out, except for that 30%, and you leave that 30% in so that if it continues to go up, you still continue to get to reap the benefits from it. But if it crashes, it's just the house's money. And then lastly, 40% where you redeploy to other projects. Yeah, I love the strategy, but the key thing is you do have to make sure you know like where's your break-even point, right? So 10, 20, 30, 40. Yeah, so next up, so if we're good with sharing some strategies, what I'm going to go do is I'm going to show you guys a calculator that I set up. So this is a crypto, I guess, take profit calculator that some of you guys have seen that I've been talking about, like I've been working on, and this is the beta that I'm going to release out to everybody. And if you guys are watching from YouTube, I will be sharing the link in the description afterwards. So let's take a look at this, right? So let's start with the demo sheet, right? So so feel free to just share in the chat. Just give me a couple coins that we're going to use for this demo tracking account. So obviously you want to have like BTC, right? You want to have like VET. Feel free to also like put down like the buy-in price, a theoretical buy-in price, so that we can include that. So we get ADA. Let's say E right? If you're starting out, it's probably best to just keep 3 coins on hand so that at least you can keep track of it. If you're more experienced, you can do more, but the downside about having more is it's gonna be hard to keep track, and also you have to make sure that your coins are stored in a safe place, right? Your exchange is not a safe place. Exchanges can disappear anytime. Exchanges can go down. Exchanges, especially you saw today, could even shut down a service right when you want to make like a critical buy or a critical sale. So it's important to know like to have the right exchange, the right service to make sure you are not you're not going to like screw yourself like right from the beginning. So so I'm gonna put Matic too because Matic took off, and I'm gonna replace Dot with Doge. Let's do that. So let's say we got Matic at 20 cents, right? Average entry at 20 cents, and we bought let's say we bought like $1,000, like $200, right? This is not a lot. ETH, right? ETH, let's say we bought like 2 ETH at $2,000, right? Doge, let's say you were lucky back in February from when the GameStop and everybody said let's get Doge. You got in at the worst point of February, Doge pump, right? You got in at 10 cents, right? I'm gonna be very conservative here. I'm gonna use like some of the worst scenarios so that we can see that even at the worst position you can still do well, right? And then let's say you got like 5,000 Doge. That's just $500 right there, right? Maybe for ADA, who wants to give an ADA? ADA at 215. Yeah, let's do that. ADA at 215. Let's say you put in like $200, 200 ADA, right? You don't have a lot. VET, VeChain, 12 cents. And we put in, let's say 1,000 VeChains. And then Bitcoin, let's do, let's say you got some today. You were lucky enough. You got some today and you got like $3,000 of Bitcoin. So right here, you can see that this calculates like the amount of capital we put in, right? $3,000, 120, 430, 500 Doge, $4,000 of ETH, and then $200. Let's make this one. Let's say, right? Because you always want like Bitcoin to be king, especially for anyone who is new in this space, right? And with this, you can see that with the distribution, right? You have like $6,000 in total. Almost like half of this is in Bitcoin and like 1/3 in ETH now. And let's see next up. In total you have like 6,000, right? It's not really a lot. It's a modest amount. It's realistic. It's not like, oh, you got in and like back at like 2013, right? You got in like this year, right? Let's see. And then next up, we can look at here, right? We can look at next up. You can look at right here. We can see this is where the lock-in gains, right? Where you want to set like a percentage of gains. And this is where remember how I was asking about like, let's decide on the strategy, right? When do you want to lock in gains and what percentage do you want to, right? So let's say the strategy is we want to lock in gains at every, let's say 2x, right? I want to lock in at every 2x, whatever amount here, we have to put in like 2x of that, right? So this would be like 6 6K, 24 cents. When you know Excel, you can also do this too. This is Excel magic. You can do it. And then you can also set like what percentage of gains do you want to like lock in, right? So you can be conservative, right, and do like a 50% gains, right? And with something like this, right, this calculator calculates how like what quantity of tokens do you take out. So so with a 50%, I guess take profit, right? You take profit on what you put in, like right when it 2x's, right? And by doing so, like if like any of these tokens that doubles, you take 50% off. That means you take your initial capital, and everything in here from this point on, you can consider as like the house's money. And of course, not every one of them will like hit like the target, like the 2x target, like at the same time, right? Some may hit it faster than others, right? For Matic, right? We know that Matic, right? They are at $2. I think Matic right now they are at $2. Hopefully they're still at $2. I think they may have dropped. Right. So Matic, you can see that. So yeah, $1.60. So 1.6, right? So if here, like notice how this lights up, right? Meaning you should have taken profit, or at least you're good to take profit at this point, right? So for the beta, you do get this function that it does light up to tell you that hey, it's time to take profit if you choose to follow through with your plan, right? And then let's look at other tokens. Feel free to just look to go on CoinGecko and pull up the token prices so that I can start putting them in. So for Bitcoin, it's about 37.8. Let's put 37,800. VeChain. I don't know how much VeChain is. For VeChain, it's about 10 cents right now. So this, and then ADA 2400 ETH. How much is Doge at right now?
35, I think.
1.51. 33, 35. Okay, so notice how these two light up. That means they have reached your target, and you can sell if you want to, right? And then next up, you can decide on the next target point, right? So maybe like you say that, I like nice numbers. If Bitcoin hits 100K, I'll take them out, right? Or you can have like a set strategy, right? Policy where you say if it doubles again, right? If it doubles again, I'll take. If it doubles again, so it'll be like from here you double again. You can set a policy like this. You can set a policy like that, right? But the nice thing about this system is it doesn't have to be fully rigid. Right? You could customize this part here where you can say that I'm going to set my target prices here. You can say that maybe like you feel that Bitcoin could go higher, right? You can just say that I'm going to set like 15K or 150K, right? You can say that VET could be going up to like $1. The downside about setting this too far is you don't want to set this up too far because let's say I'm thinking if I set my like Doge at $10, right? The chances of a Doge going to $10 is not that high, right? And if you set too high, you may not even trigger these targets, and as a result, you may end up like riding your token. Like let's say your target is here, right? The price of Doge goes up here and it goes down, and you end up riding it to the top and to the bottom without hitting your target. So you have to set like realistic targets, and this is where the customization component comes in, right? This is why I made this more customizable for you guys, so that you don't have to do like 2x anymore, right? If you think that Bitcoin is going to be like topping out at, let's say, at 20K, right? Oh, not 20K, 200K, right? You can set 200K right here. You don't have to like continue to do like 2x of the one previous, So you can set these arbitrary values here. You can say that some people may have like three scenarios. This is like break even. This is their 2x, like maybe like 2x profit, and then this is their like big hairy audacious goals, like BHAG, right? What they really want, right? And then here, this is the moon bag at the very end. So you can see right here, right? With here, you can, if here you can set, you can set other target. So let's say VChain is going to like 50 cents, right? At this part target, and maybe for here you think ADA is going to go to $5 here, right? You like whole numbers. Another thing you worry be concerned about when you're using whole numbers is that it is a bias. So when you're using something that is a bias, it may hit it or it may not hit it. And sometimes like whole numbers, like a token of a stock, an equity may just come close to the whole number before dropping, because everybody is thinking about that, right? And then you have the smart money who are placing like sell orders like slightly below that whole number. So consider thinking about that. Yeah, and you have to be realistic on, and Andrew made a good point about I think twice before changing a target. You also want to be realistic about a target too. You want to look at how far in the bull market cycle, how far are you in the alt season, right? If a token has already gone up like 20x already, the chances of it going up like a 2x after you got it, right, after or maybe another 10x is not likely. So you have to be realistic about it, and sometimes you may have to you do have to change up your strategy if you have to. And so let's continue here. Let's say $5 here, and then Doge, right? Let's say Doge. I'm gonna be conservative and do $1 for Doge. ETH, let's do 8K, right? And then Matic, we know that Matic's at $2 already, right? So it was at $2. So maybe exit strategy one is if it reaches $2, we can take profit. If it doubles from there, $4, we can take profit again. And from there, we have to decide like what percentage do we want to take, right? Since we took 50% already, we should probably put down like maybe like 20% of whatever's left, or 30% of whatever's of the whole pie, right? So overall, all these numbers should add up to 100, right? Or at least these three should add up, and then this shows you like whatever's left, right? So from here, you can see that if with exit 2, right, if all these tokens reach your second exit, right, target, you would have made like another like I guess it would be like a 10K right here, right? 1.6 like ROI right here. And then lastly, you want to do like you can do more, right? But I just set up 3 exit targets because we are pretty far, either at halfway through or 2/3 of the cycle already. This is what I believe in. Maybe we may be at the early stages too, depending on which cycle doctrine you think. Because some people do go by the super cycle doctrine, where they think that Bitcoin will go up to $1 million by the end of the cycle. But you have to do your own research and know like what are some realistic targets you can get, right? So maybe this one is some exit 3, right? This is where that you want to make even more, right? If it continues to go up, right? And notice how everything from here on, right? It's basically the house's money, right? If it you want to set it up in a way that if it goes to 0, like even if it goes to 0 from here on, right? From here on, exit 2 and on, right? You're not going to cry. You're not going to be all gloomy and emo, because you've already taken out what you put in during the first part. All right. So for exit 3, let's have some fun, right? Let's say it's $1 here. Let's say this goes up to $10. Either $10. Doge goes up to $5. $2, more realistic. Though it's not even $1 is already ambitious in my opinion, but just for fun, right? And ETH, right? I think we've heard of people who said that 20K could be possible. And then Matic, let's say $10 Matic, right? So we can see, right, with this, right, we can see another like take profit, right? After taking out these profits, it could be worth this much. And then here, this is the best part where it calculates all your gains, right? All your gains here from all your free take profit points, and it'll tell you like this is how much your total gains, right? Based on what you put in your ROI. And then, of course, I also put, I do believe in the idea of keeping a moon bag. So after everything you have taken from here, you have a moon bag system. So you can, so this will calculate that. I mean, some people may say, oh, I don't want a moon bag. I just want to keep everything. And then you can put like, make sure it's 0 here, right? But yeah, it's always a good, I do personally feel it's a good idea to keep a moon bag in case if it keeps going up, because you don't want to be the guy who sold Doge at like a penny, only to see it go up to, only see it go up to like 60, 70 cents, right? You always want to have something in there. This is just my personal opinion, but you can do how you like. So yeah, and then yes, it's just some tips, other tips here, right? Never keep coins on the exchange. Exchanges are not insured; they can disappear your coins. Use a Nano Ledger if you want to store for long term. I do personally believe that Nano Ledger is better than Trezor or some of the other newer hardware wallets, because we do have a cybersecurity expert in the community, and a lot of people, a lot of companies, they hire him to recover like coins from their hardware wallets, and he told us that he has been able to recover, hack into every single wallet except for the Nano Ledger. So yeah, so something to consider. And then yeah, only put in what you can afford to lose, and remember to set aside your earnings so that you can report your earnings as taxes and capital gains. And yeah, and I do keep and there's a reason why I didn't have a tax calculator for this, is because everybody has their own like tax brackets. So it is so that, and there's no way I could calculate everybody's taxes. So yeah, so I'll just keep this open for now. And I mean, if you know your tax bracket, you can just take like your total gains and you multiply by, I guess you can just run it through your accountant, your tax expert, to figure out how much you owe. Right, but that is only after you have made your gains, right? But you can use it to determine like, what is your expected tax rate. But yeah, and then just for fun, I also have this calculator that shows like diamond hands potential gain, where like it shows you like if you choose to not take any profit at exit 1 and 2, and you happen to hit all your targets at exit 3, this is how much you could be making. And of course, I don't recommend like using like ignoring your first 2 targets. Sometimes it's better to like take profit, right? And it's sometimes better to lock in some profit than to miss like the diamond hands target and not have anything. And sometimes you may even like you may be greedy in a way that it hit like target 3, but you're not selling it. You think that if you keep, and by doing that, it's probably the same as like not having a plan at all. Like if you have a plan but you don't follow it, it's the same as not having a plan at all. And I do feel it's important for everyone to have a plan. So yeah, so I'm just going to do right now. I'm going to share the link right here. Since you guys are all here, I'm going to share the link with everybody. I'm going to share the link here. With
Ed, while you do that, I just want to chime in here and say this is excellent. Having a plan is absolutely important, and having a plan is written. That's even more important, and then sticking to your written plan. So this is so awesome. We had a comment in the chat, Ed, speaking of moon bags. They're already saying maybe we can have you add a few more lines to this, so we can have more before you send that out to people in case they're holding 10 different altcoins or something like that.
Oh, so the way to do that is actually easy. You can just unhide. I actually have like, boom, all these rows right here. So you do have a lot more if needed to.
There you go.
The way you want to get a copy is just go here, go file, and then just click on make a copy. And so you can just move it over to your Google Docs account, and you can test it out with everything. So this is how you could do it. And yeah, I think this is my gift for everybody. I do hope that I know that there's a lot of fear, doubt, uncertainty, and doubt here. There's a lot of dangerous hazards in the space, and yeah, my goal for all of you guys is to have this tool, right, to plan your entrance and exits. And yeah, and if you guys do want to find out see more like guides and tools on my blog is 1 Hour Investing. So you can go here, onehourinvesting.com. You can go to onehourinvesting.com, and then you can see right here, right? Basically, these are some of my blog articles and some of the recordings from the past sessions. I also have a crypto quick start guide for the couple people here who do not have crypto, right? So yeah, just a quick guide on how to get started. Some of the top exchanges that I recommend, right? And then also some guides right here, like how to get started, right? This is one of the infographics that has helped like a lot of people, right? How to get started with crypto. You can see, right? Just a step-by-step guide on what to do and what not to do. Right. And then also like common mistakes in the crypto space, and then I have a list, and then how to like find like different crypto influencers, right? And how to find the right, how to like what to look for, and then a couple of people that I follow personally. So yeah, so this is just a quick, I guess, introduction to like how to plan the space. So maybe we're getting close to the hour, so maybe I'll open up the floor for about like 5 to 10 minutes for any further questions, and then afterwards we can do the next part where we can we can talk, we can have Robert do like a quick like that quick analysis of different tokens. It'll be like rapid fire session. So yeah, so you guys should be able to unmute yourself if you guys want. Or you can type in a comment and I can wait.
Hey, Ed.
So yeah.
Hi.
Here we go.
Hi. I was kind of brainstorming with a buddy of mine here. He's the one who kind of got me into crypto the first place, and he took a heavy hit, like everybody kind of did, like last night. And we were saying,
we sure did.
Yeah, it was a good one, eh? So it actually made me feel a little bit better because I'm not as invested as he is. Mind you, he's been on since the beginning of the year. He was able to do quite well, so he's still okay. But we were thinking, is there an option there on the exchanges to build start a US dollar Tether account that we can pull funds without cashing out in coin, and then we can have that sort of security, because it takes time to pull funds out, right? Through.
Yeah, so I can tell you, I guess I'm a trick, or at least a common mistake people make in the area of like how to manage the funds and such, right? Especially like after you've exited, but like you've taken profit, right? So let's say this is your exchange account, right? Exchange account, right? Okay, I'm just gonna call this Binance, because this is the Binance. Made some profit, right? But it's still paper profit, right? Maybe you haven't taken any profit now, right? So the one common way people do is they can try to like withdraw back into like dollars, right? They take it to an off ramp, or they just tell Binance to deposit it into the bank account. The downside about this is you do get charged like a pretty high fee with anything that involves like working with a bank. Usually they charge like an exit fee. So what I know some people do is instead of selling the coins, right? Instead of selling the Bitcoin, right? They actually send it over and turn it into like into Tether, into like a USDT or a stable coin, right? So this could be like USDT, USDC, BUSD. So this is like a stable coin. So they turn it into a stable coin, and then they withdraw the stable coin over to their like ledger, hardware wallet, right? So hardware wallet. They do that, right? So and the nice thing about doing this is you're not keeping your stable coins on Binance or any exchanges. If it collapses, all your coins are, and if you ever want to turn it back into cash, right? There are two ways. You can find someone and say, hey, I'm going to sell you my crypto. It's currently in Tether, so I can sell this to you in Tether. Like if you're in the US, it's easy, right? You can just trade it one Tether for $1, right? You don't have to negotiate on prices. Some people do ask for like a small premium, but this is based on how you negotiate with the person, right? Some people may go to an over-the-counter exchange, right? OTC, right? So you have like a guy behind a desk, right, over the counter, right? You can also go to you can use an app. You can send it to an app, right? Coinbase. And if you're in Canada, there's a Newton exchange. I know they're getting a lot of flack lately because they have bad service, but there's a lot of like ShakePay, any other off ramps, right? Off ramps. I'm going to type it out because my mouse drawing skill is horrible. Yeah, so you can send it over to like an off ramp, like to cash out, right? But what I know some people is they keep on a hardware wallet, and let's say we have a dip, like what we just experienced today, right? They can actually send it back over to the exchange. They can send it back over to the Binance, their like Coinbase, their crypto.com, right? As like they can send it back to the exchange. They can send it back to the exchange as I guess some dry powder, and then they can make the next trade right there. So this is how I know how a lot of seasoned like crypto traders do, right? Whatever you do, just keep your coins off an exchange, right? Because you don't know like if they could disappear at any moment. But hopefully that gives you a good insight. Because here you have to pay a fee. You pay a pretty hefty fee when it comes to like going to an off ramp, right? When it's coming out of Binance, especially in the form of like a Bitcoin or even if you're sending it out as an ETH, right? If you send it out as an ETH, you're paying like about like $20 to $50 worth of gas fees. But if you can send it out as convert it as like a Tether, right? And then you send it out as a Tether token to like another person, you're paying like I think Tether on Tron network is about like $1 transaction fees. So so that's over to the next question here. So how do you suppose exiting initial principal on a diversified portfolio where some coins are up and others are down? So it comes so for this question that I just asked, like how do you so I'm just going to like copy or paste the question here, right? How do you exit, right? If you have some coins that are up and some coins are down, it comes down to your trading strategy, right? If the principle or the policy you're giving yourself is, I'm going to sell like after hitting the target, right? Maybe you have like sell targets at all these areas so that it has already exited for you, right? You have like whenever it hits these targets, it auto triggers a sale, and then what would happen is you would notice that you have like Tether in that account, right? Some people keep the coins on exchange and it gives them that flexibility. Other people they may set like alerts on their phone. They may set alerts on the exchange, and then when they see that alert has triggered, they send the coins over from the hard wallet to the exchange to sell. Right, and then and they'll just sell like as these targets that get triggered, right? And of course, based on this example, these people would take their Tether, take their USDC stablecoin, whatever stablecoin they decide to sell to, move it over to a hardware wallet for safe storage. If you're going with the 10, 20, 30, 40 principle, right? You can sell 70% of the tokens, and then put 10% to BTC, 20% to ETH, and then 40% to the next project right there. So that's So that's for high right there. And then next question. Yeah, so Robert made a comment about tax consequences about buying and selling at peaks or bottoms. So yeah, be careful with that. Yeah, as I mentioned on the calculator, right? Make sure you keep track of that, right? Make sure you keep set aside some of your earnings as taxes, because the tax man is going to ask for that money, especially if you are working with KYC exchange, an exchange where they got your KYC information already. You should expect that when the taxman comes knocking, they are going to go to the exchange and ask the exchange for your transaction data, and they'll know how much you owe them. And the way they do is they work with the information from the previous years. That means if you made a profit last year, but you're at a loss this year, they don't care about what happened this year. They just want the taxes that's owed from last year. So don't be the guy who made a lot, right, and you end up having to liquidate this year just to pay off the tax bill from last year. So let's go on next question. Yeah, could we put new money? So yeah, so in terms of so Dave just asked a question about TFSA and money, tax-free savings. Currently TFSA can, like, which is in the US, I think it's your Roth. It's basically your, like, when you can invest without paying taxes, right? Because it's tax-free savings account. So for that, it's only available with ETF. So you can only do like ETF trade. You can't really get like tax-free benefits on like all your coins, and you also have to pay like a management fee, because ETF usually charge like some fees, right? So that is a trade-off. You do get tax-free benefits, but yeah, you have to pay this fee, and also you don't have that flexibility where you can take your coins out and put it up, maybe up as a collateral, so that you can get a loan, which I do know some people are doing. They're doing just so that they can enjoy the benefits of the coins without having to pay taxes on it, and also they don't have to worry about missing out on future gains. So yeah, so I think that's about all the questions we have. I know someone asked more questions about taxes and such. We do have a video on taxes that we had with Mr. Taxes, aka Rob Stone. So you could check our website, 1 Hour Investing. We do have that. It's one of the past videos, so you can find that video here. So this is for taxes in Canada. We may consider doing we can find like a tax expert in the US. We could do another video for that in the future. But yeah, but here it is, Rob Stone video. So that's from March 24th. So yeah, so I think that's all the questions we have. I do want to be respectful of everybody's time. I know that we have some people who are joining us from the East Coast. So
Ed, I do have one question.
You have one question, Steve? So yeah, so I'll take a question, the last question, and then I will move on to next.
Sure. So are you saying it's cheaper to change ETH to Tether and then transfer the Tether to a different exchange and then buy ETH again, as opposed to just transfer the ETH? It sounds like that's what you're saying.
So working with ETH, right? So let me show you, if I can show you like the withdraw function here. Oh, you have to log in first, but the problem about ETH network, right, is people are paying about like $50, $20 to $50 in gas fees and transaction, right? Tether is mainly an Ethereum token, Ethereum-based token, but they also have like a Tron format and also a Binance Smart Chain, a BSC format, and depending on which network, like, you request your Tether to be in, yeah, your transaction fees will vary. And right now, the Tron network is everybody's favorite network for sending Tether around, because you can send like $1,000, $1 million of Tether and only pay like $1 fee, while you're paying like $50, $20 on other networks. So
Right, but when you
But
sell,
in
sell
regards
ETH
to
by Tether, isn't that a there's a gas fee associated with that too? No.
if you sell ETH, if you're selling it on an exchange like Binance, right? You only pay like the exchange fees. I think the exchange fees is like 0.1%. Right.
Okay,
And that
got
is
it.
if you don't have a referral code, or you have a referral code, it's cheaper than that. Right. Right. And yeah, if you're sending, and in terms of sending Ethereum from one exchange to another, it's probably not recommended, like unless you have an opportunity. You see like an arbitrage opportunity where like the price difference is so great that you can make a lot of profit, right? You can make more profit than the price of like sending your ETH across. But even with arbitrage, I don't like it's not like for everybody. Like if you see like, two exchanges with different prices, usually the gap in prices will even out like over time, like or sometimes quickly. Because if you not because you are likely not the first person to find out about it. So yeah, so I think that concludes like our take profit like calculator exercise. So yeah, so do take a look at. I do give this calculator a try. If you're watching, I do have it in the description on YouTube. So yeah, so are we going to start the next part where we're going to do like rapid fire coin analysis with our community mentor Robert Paddock. So Robert, let us know when you're ready.
Okay, no problem. Anytime I'm ready. If you throw a chart in front of me, I'll be able to talk about it, no problem. If you can make me co-host, that'll be sweet. I can share my screen and we can get started right away. While he's doing that, I want to say hi again. Welcome, everybody. For those that don't know me, my name is Robert Paddock. I've known Ed for a few years now. We were bumping into each other when we realized a lot of people didn't have a good clue what they were doing when crypto was relatively new. It is still relatively new to this day. And we are the early adopters. So we're trying to help people navigate safely the shark-infested waters because there are sharks. We have to realize the reality. And what we're doing is having people the lifeboat to help them survive. So this is great that we have these sessions. Thank you, Ed, for such a wonderful, introduction and all of the tools that you're making. And you're really putting your heart out there to help everyone succeed as much as possible. It's all about creating a community. We have so many different great mentors here that have excellence in different fields, like Ed mentioned, security, different things. So definitely, I do love this topic, when to exit and take profits. That's part of some of the most stressful things that you can come across when a trader. Even when you have a successful trade, you can get out too early and then beat yourself up for not holding a little bit longer, or perhaps, you should have gotten out and then you didn't. So this is something where mindset is very important. And definitely we have here, Ed, some coins. So please feel free to fill out this poll. Which coins interest you the most, and or feel free to type in the chat any other coins that I may have missed that you want me to quickly do a rapid fire over. I'm going to pick just random 20 coins and go as fast as I can through them, and then it'll leave the door open for another 5 or 10 coins. So I'm not going to spend more than a minute on each one. I'm going to go as fast as possible, maybe even 30 seconds. So yeah, definitely drop them in the comments and let Ed read them out to me when I've got to that point. But yes, I do have to say something first. So when it comes to this, when to take profits, this is very important to understand. So what we do have here, I am going to mention that since we're on that topic, understand that for myself as a trader of 27 years experience, I have won first place in the world in a global stock trading competition at the age of 21. I have been well versed in what to do as well as what not to do. I have also made every single possible mistake you can think of. And this is an important topic that Ed selected for today's call. Don't underestimate it, because having a risk reward is very important. Understand how much profit can you make versus how much can you lose on any one trade. So this is a prior presentation we did at one point. We had, the top 20 mistakes traders make. This was just mistake number 17, which was, always try to make $2 or $3 for every $1 you lose. I do that for every single investment, not just in trading. So, that's very important to realize. In order to do this, you first have to have targets, right? So where are you going to get in? Where are you going to get out if you're correct? And where are you going to get out when you're wrong? And I can urge you highly to have those targets where you're going to exit if it's wrong and where you're going to exit when you're right. And understand there will be days when you're wrong. No trader in the planet can be right 100% of the time. So get rid of that mentality that, you know, you've maybe understood from school that you always got to be right. Realize when you are wrong, you're not going to get wiped out. Have stop losses. So if it were to keep lowering, and, you know, often people won't have a stop loss, they'll buy something at any moment, random time, and then it goes up or down. They think they'll make $1 or lose $1. What does it do? It drops. And usually people think they can only make money when it goes up. So we'll use that example. Price drops, and then they're like, oh, what do you hear often people think or say? Maybe you know someone like this. They'll buy the dip. I know Ed has a wonderful meme somewhere about buying the dips, and we're going to post those in our community. But then what happens? It drops even more, right? You ever experienced that? Then people reach out to me so often. This is why I'm bringing this up real quick. Rob, what do I do? Rob, what do I do? And often I have to say, you know, I'm sad, but I have to say you should have listened to me earlier on, where you have a stop loss, because you determine where you're going to exit if you're right, where you're going to exit when you're wrong. And you do that before you even enter the trade. So you're going to look at the chart, see are those realistic targets, like Ed said, to both the upside and the downside. And then if you had done this where you exited down here, you could now repurchase down here. And if it goes up just a little bit, you're now in the big profit, which is much bigger than this tiny loss. So, you know, even though you were wrong on the direction initially, you're still making money. So have a risk reward ratio. Always try to make more than you can lose on any one trade. And also try to not pick random times to get in. So, for example, you have here resistance and support. You draw trend lines. You do, you know, look at peaks, look at bottoms. And don't be the random person that does this. They buy at any random time when it's just whatever it is in the channel, because they don't even know how to identify channels. And they think, oh, it's going to go up, but it can go up and down just as much. So now what you can see is, you know, this would have been a better entry. Now that you have the ability to learn how to draw resistance and support, maybe you can buy somewhere cheaper. Get that $50 t-shirt for $20 instead, and have a downside target that's much smaller than the potential upside target, right? And likewise, you can also sell, because we make money in both directions as traders. This is another mistake that people often overlook when they're newer to trading, is they think you can only profit when things go up. Here you can see if this goes up, I'm losing money, but if it drops, I'm making money. So learn how to do that. That is definitely a skill that is good to know. And absolutely, I had mentioned about the leverage. I agree that it is a double-edged sword. Don't scale up too quickly. Don't use too much of your portfolio at any one time. And understand that, you know, this is definitely something that you can learn, okay? You can just, by plugging in, coming to this you know, community here, you're going to learn a lot of stuff. And also, don't forget to bring your friends here if you do get any value from these calls. So I do want to mention that Ed mentioned institutional trading quite a bit today. So we do have, you can see a lot of stuff happening with institutional stuff. So yes, when you have a big wick of a candle, this is a candle here. And when you see that it is actually this thin line underneath the candle, the longer that wick is, that is what you're looking for. Those are institutional players typically getting involved. And even the body of the candle can be very big. That's also institutional traders, meaning big banks, whales, people with a lot of money controlling the prices. So do realize that whales don't just try to push the price down so they can buy it cheaper, okay? They profit in both directions also. So you have to understand that if you can make money where the things go up or down, now you can realize that they're actually making money on the declines too. It's a whole different ball game, and you can look at it from a different approach. So yes, leverage, I just got to mention also, it can be dangerous. It can also help you. So realize that just like driving a car, it can be dangerous. If you don't wear your seatbelt, if you don't drive the speed limit, obey the rules of the road, you know, people do die in cars. And does that mean we should never trade or never drive a car? Absolutely not. In fact, you're better off having one. So, you know, keep that in mind, that it is a double-edged sword only if you don't know what you're doing. So do participate in educational programs, get a mentor, help you cut the shortcut of learning for a long period of time down to getting results immediately, and invest for yourself, but not by yourself. That's all I'm going to say. So let's go right into this analysis here. But before we do that, I just want to quickly pull up a quick recap, just a minute of last week, what we had said, right? So we can see here, I'm going to put the sound. So here we can see what we had said exactly 7 days ago, okay, on these rapid fire calls. Actually, last week was a more extended version, and what we had said last week. So let's go ahead and just play it.
Now have a more bearish signal. Okay, I'm keeping the lines parallel, and we can see that this could perhaps go to as low as 30,000.
This is Bitcoin.
So I am making a bold prediction here that we at this time cannot rule out the possibility of Bitcoin hitting 30,000. If you combine that with the coin market cap dominance, where Bitcoin is tanking and steadily declining and trajecting lower, there is a chance it could continue on that path. If it does, it could easily hit 30,000 still. I'm going to turn on my moving averages here since we're with this first MACD line. So my target is very realistically about 40,000 and possibly even actually this down here. Wow, that's actually 20,000. So we can't rule out 20,000 for Bitcoin. And this is perhaps going to be recorded and watched one day in the future. So hello future, when it's 20,000 again, because I have been spot on quite often, but I do super bold predictions and still have high accuracy. Just realized that, you know, we do have all the three moving averages down here, 2 days or a month and a week.
This is Ethereum.
So by the beginning of June, it is possible we could see Ethereum at 2,000. These are crazy predictions, 50% off, but we'll come back to this in a month or two, I guess. Okay, so that's not looking good right now. Let's put on the Bollinger Band. It is in the upper half of the house. Okay, so the middle is right here. It is right here right now. So there's a chance it could somewhat decline, if not go even further to the first moving average. So I'm not looking very happy here. I do see a potential fresh cross about to happen on Ethereum. I'm not going to spend this much time on all the coins. I'm just focusing on Bitcoin and Ethereum the most. But we can see that could be coming. If that does materialize, I'm known for pinpointing tops in the markets because I can see these things happening. Now, there's no guarantee it will, but this stochastics will happen first, which will drag the MACD to do a fresh cross and perhaps drag the RSI back to closer to 50. And always look at the number up here. It's currently 70. So going from 70 down to 50, I have to favor strongly the bear camp to the downside for Ethereum. Actually abort mission really quickly, because that's not a time when I would be staking. Yeah, we can see that's not a good timing for Litecoin either. And although this one is, what do we have? A decline and a decline. And it actually hit perfectly that level with the wick.
Okay, so you get an idea. This was last week, right? So we saw Bitcoin. We had called it when it was in the 50s that it could hit 30,000 was the correct answer. I had actually given 3 targets for that. It was actually 40,000, 32,000, and 20,000. So those are the numbers someone had asked in the chat today for the downside. So yes, a lot of people took a hit. I am not one of those people. I did not take any hit for the last 7 days at all. In fact, we're showing people that I had made a profit. So this is something that I hope to stress to you, that this is something very powerful that we can do. And I have to give a disclaimer right now. So myself, Ed, and everyone else on this call is not making themselves out to be a tax advisor, lawyer, or a financial planner. Do reach out to a certified professional before making decisions. Anything we discuss before, during, or after this meeting is strictly educational purposes only, to teach you how to read the charts, do your own due diligence, be confident in your own decision-making abilities so you can actually be making your decisions, not trusting someone else. So we're not making ourselves out to be, we're not selling any securities, we're not giving any advice, and don't hold us liable for any decisions you make arising out of these charts, because they can change 5 minutes after you watch this. Okay, so be aware that we're trying to teach you, give you the skills that you can do this yourself. So with that out of the way, let's go ahead and let's just quickly now go into the charts, because I do want to show you that, you know, this is something very, very powerful that you can now do yourself. But when we're looking at charts, Ed mentioned something interesting. He mentioned super cycles. Okay, and I do want to just touch on that for 1 second. We do see here that we have also, let me go share my screen again. We got great turnout today. So let's share this. So there are a couple more mistakes I want to point out here. So investing only for the long term. So realize there are mini cycles on top of smaller cycles. So what do I mean by that? You may have a super cycle, and you can also have smaller cycles on top of mini cycles. So when we're doing the charting analysis today, I want you to realize I may be looking at only the charts and only right now looking forward to the next 7 days. But sometimes I may make predictions that are out 1 or 2 months. Okay, so we're doing both here. Now, again, these predictions are just for strictly entertainment and education purposes. Realize that you should be learning how to not just hodl, because this is something that you're going to miss out. As you can see now, what I saw a week ago is that by simply learning when to be on the sidelines, that counts as a position when others are losing money. And just learning when to be in and out could be already better than just strictly hodling or just staking. Also, you can go one step further. You can actually then learn how to profit in the downward direction, because then there's opportunities both up and down as traders can make. So now let's look at the charts. And the first one we're going to look at is, before we go into a specific coin, Ethereum BTC ratio, as we had touched on last week, we mentioned we're going to be doing. So I'm going to point up CoinGecko. And let's go ahead and quickly, sorry, not CoinGecko. Let's do, this is a better one. But the only reason I'm going to look up this website, CoinMarketCap, does have one feature that I do like here at cryptocurrencies. If I hover my mouse above cryptocurrencies and I click on global charts, we're going to touch on this every single week. We're going to look at the market cap dominance, because this is very important in terms of immunity, in terms of being delisted from exchanges for the best coin. So whoever is the high performer has a lesser chance of being delisted. And as we had mentioned last week, we're keeping a close eye on Bitcoin's lackluster support here, movements here. We had mentioned that it hasn't been this low for 3 years. Now it's even longer. Okay, so it just keeps getting worse and worse. During this time, when Ed and I were talking about the coin market cap dominance for Bitcoin going down to so close to Ethereum, we realized that we could have the flippening occur. This is still possible that the altcoin season will occur. The reason I'm pointing this out is because this is 50-50 at any given moment. Nobody has a crystal ball. I did say a couple of years ago that it's only a matter of time that Bitcoin will be replaced by another coin. But when it's dipped so much, it can always revert quickly back up. And that would be perhaps an instance of buy the dip. However, it is also, are we getting into a harsher altcoin season? So that's not something I want to speculate on, but I will talk about the other charts of every coin. Just know that that can be dethroned by this single-handedly if Bitcoin continues to lose steam compared to other coins. So now we can go into looking at the individual coins. Real quick here. So Ed, if you can give me like a quick warning when we're low on time. So
Sure.
yeah, so we're going to go now at the coins. I'm going to start obviously with the highest market cap coins. I am going to let Ed interrupt me at any time if you got any favorite coins to look at. All right. And so what we got? Bitcoin. All right. So there we go. Where were we at last week? It was the 12th. We got here. So around, it was in the evening. So let's just say here, we were selling and we were saying, be careful. We were in the low 50s and we're going down to, we said 30. Indeed, it kissed 30. All right. We actually, I think I said 32, but 30 is definitely it touched. So that was an opportunity to get some buying there. Definitely, because it is cheaper. I'm not going to go so far as to say ready to go back up. However, I see now for the bulls, they have now a better case. Obviously, instead of a $50 t-shirt or a $54,000 t-shirt, you can get it for $20 or $30 or $30,000. So definitely that's cheaper, better timing to be buying long term if you're looking to go up. Again, this is not financial advice. This is strictly just talking about how the price has gone down and it's lower. So it's obviously you can buy almost twice as many now. So what we're going to look at is realize Okay, Bitcoin. I'm going to pull up some more indicators here. Let me pull up my arrow. All right, so you can see here when we were doing this. First of all, this okay, I want to show you the Bollinger Band. So I'm going to use the same indicators usually on these rapid fires to keep it quick. But Bitcoin, I'll give it a little bit extra time, in Ethereum. So Bitcoin, I'm going to turn off these moving averages, which I'm usually using the 50, the 100, and the 200. And this Bollinger Band you see on the screen, anytime the price is outside of this Bollinger Band, I like calling that as a joke, free money. Okay, so as you can see, 30,000, if someone had asked me at that particular moment, what I think, and I would have been like, absolutely, this could easily go back up to the the lower Bollinger Band. All right, it typically goes back to the middle Bollinger Band. So here again, you see another wick. That was free money, and you can also see them sometimes above. So that was easy, free 30 grand going up to like 36, 35 grand, right? So that's quite a big jump. Right now, we're absolutely in the middle of the Bollinger Band. That tells me absolutely zero direction, 50-50 still, despite having fallen. What I am going to do, though, is insert the 50, the 100, and the 200 moving averages. We could actually have seen this coming because the pink line crossed below the black line. The pink line is the 50 crossing below the black. That is considered a death cross. All right, that happened right before I had called that sell. All right, that was part of my reasoning why I saw it coming, a huge decline. All right, and as you can see, the pink line, as it remained below the black line, that allowed the price to keep tanking. It is still there. However, there is a chance it can start heading upward, but it's got a while to go before it crosses back above that black line, which would encourage buyers. So there's a lot of pessimism still in the markets, even for no matter how people use the moving average. However, how I like to use the moving average is the further away I am from it, the more bullish I am. So that is the most bullish I am on this entire chart, going back, let's see here, almost a couple weeks. Okay, so if there was a time on this chart in the last couple of weeks, now would have been when I was the most bullish, simply for the fact that I'm the furthest away from this moving average. Okay, they treat them like a magnet. That's how I treat moving averages. Okay, in terms of everything else here, I see some bullishness. I do see from here to here, it is somewhat sideways to slightly lower. And if I replicate that here, I'm going to use straight lines because it's being recorded. We can see that our target is around 45,000. All right. So just based on the divergence alone, we saw the price respect that level quite much until it diverged away. And now it may converge back up to the mid 40s is very reasonable. Currently at 37.99. All right. So definitely that is somewhat good news for the bulls. I'm using 1 hour candles. Let's take a peek at the 1 day candles. All right. Okay. So this is a different story here. So you can see, yes, I'm still bullish in terms of these Bollinger Bands here. Going back to the middle is the path of least resistance. That's 50K is doable. However, there is the bad news, which we saw last week, materialized. So I had drawn on the call, a head and shoulders. You can pick your shoulder. Let's just do this one here. The head, the shoulder. This is one pattern we often use. Actually, we're below the neckline now. So this is not good because of this receding neckline. We just barely crossed it. So that means we do have the possibility to go more down. Let's see how far down. If I go the height of this head here, that is the target. So if I do another one, let's actually not draw that. Let's draw an arrow. All right. And I'm going to drag one of those down here to below the neckline where it just crossed over. Boom, we got 30,000. Now we did touch 30,000. That's how we got that target. Okay. And as soon as it hit that target, the pattern is finished. You turn it off, you delete it, it's 50-50 again. Okay. And typically what we have after something goes off a cliff, we have a dead cat bounce. That's the terminology day traders use. I didn't call it that. So I like cats. Okay. So don't hate me, the animal lovers. So, however, I'm seeing something interesting. Now that we're a week later, guess what? We may now have a formation coming of another different head and shoulder here. If we can call this entire experience we've just had as the head, we may now see a bounce like we're starting to see already. I may see my 50K or 45K, all right? Anywhere between 40 up to all-time highs, it counts as a shoulder. So it could be here, it could be here, it could be here. I don't know which one it'll be yet. It's too early to say. What I'll use is the other indicators to indicate that for me. However, it must stay below this line. If it stays below the all-time high, then it's an intact head and shoulders. If it crosses above, I'm no longer seeing a head and shoulders. I become extremely bullish at that point. So 65K or higher, I would become very in favor of the bulls. They'll have squished the bears. But for now, the bears are completely in control on this massive head and shoulders. All right. So what I'm saying is we would actually draw a line here. It would be the neckline, since 30K seems to be the number of the wick. Or if we use the body of the candle, we could see about 38,000 is the where the shoulder will begin, the right one. Okay, so we're gonna be probably good to go from here, just from my seeing. But do realize we have some trouble coming in the big picture. This is like a whole year on the screen that I have. Okay, so that means a couple months. We could see a month of going up, and then a month of going down or two. And when we retest that neckline, we could see a massive decline. That would be brutal. I don't think, I don't want to say you can't rule it out. It's possible. Touching the neckline is extremely possible. Going below it is not easy. It's 50-50. But if it drops, then it can have just a big as drop as the size of this head, which means that would wipe out like pretty much Bitcoin down to zero. So replaced entirely by a central bank digital coin, maybe. Hello, future. So anyway, so that's not good. Another bad news here is, again, the moving average, the pink line. It's not crossing below the black line, which is a death cross, the 50 crossing below the 200 moving average, but it is starting to cross below the 100, the blue line. When that pink line crosses below the blue, that will open up the door to some panic, okay? And that hasn't happened yet. It is just about to on the daily candles. So that will continue being a negative tone. I would be on the sidelines actually on this one until I see that play out. But I'm slightly more in favor of the bulls right now, simply because the final result is we're at the very low edge of the Bollinger Band. Why am I picking on Bitcoin so much? Because it can control the rest of cryptos pretty much. It is the dominant coin for now. Let me actually show here. So there's the indicators. So down here, this looks great. Okay. So we are in good shape here. I do have to side extremely well with the bulls. But while I was saying that, I drew this in my head, which I don't like. Okay. So you can actually see why it came down to there. And so we've still got some reason for the bears to have hope. Okay, so this is more of a neutral thing for me. I would stay away right now from Bitcoin. Just watch, unless you have positions, use stop losses, of course, but that's just the education purposes only. So here, Ethereum, look at that nasty red candle. That is definitely a institutional candle. The whales are out and playing. So let's go to the hourly candles. Let's have a look what happened since we called this last week on the 12th. Around here that it would go down. So we are seeing stochastics is neutral. RSI is almost neutral, near 39. It may go up slightly to 50, not much. This could be good if we get a fresh cross, meaning that the blue line crosses above this red line here. That would be a nice fresh cross. That would give us some hope. However, it is already near the middle Bollinger Band. The only thing that's really dragging it up is the fact that it's this far away from the moving averages. 3,500 is possible, but it'll definitely pause along the way at 3,000 if it can get that high. Okay, and I would be slightly in favor of going upward here also. This is quite a large dump we've seen, and it stinks, but there's, always silver lining to everything. You're fertilizing the soil and it maybe help grow the other coins. So if this can, like after a big decline, you can see, that you appreciate the sun more after a rain. So there's hope here. So let's see USDT, Binance Coin, we knew what happened there. They had some struggles. I'm just now reiterating this stance here from this bottom to this bottom of the MACD. If I repeat that, that's somewhere here. That makes me bullish. It deserves a green line. All right. So, and that's confluence with the first of the several first of the several moving averages. Okay. So we definitely can see here that we have 440. Okay, 440 to 450 is very reasonable still for Binance coin, even though they're going through some crisis. And this could actually be in the form of any increase we see now going up. We could see it come down, and that would be normal. So let's say the stochastic goes up, then it comes down, and then it comes up again. So that will form this shoulder, all right? This natural rhythm of the market. Everything moves in cycles. This will then cause this MACD to cross over to the upside, which will be bullish. And we can see it then shoot up because this will be a head and shoulders. All right. So we can see the target. Actually, I'm going to measure that really quickly for you because that's important. And I can't see it with the naked eye. So let's measure that target. If we did have a head and shoulders roughly where I drew it at 400, which is a psychological number, I'm not guaranteeing anything, but I'm also not guaranteeing definitely that will, create the head will go up to 400. So let's see that here. So if we go here, then this could end up going to 500. The second moving average, the second psychological number, 500, and it's also the height of this head, of this hypothetical head and shoulders. I'm not saying that's where the head will be. I'm just kind of guessing. All right. So it's near the middle of the Bollinger Band and is somewhat near where the previous head began. If the head actually begins higher, all right, so then what we do is actually the neckline would be sideways, perfectly sideways. Then my target would be even bigger. Then we could go to 520 and actually here 550, and then this black line, which is slowly decreasing. Keep that in mind. So between 520 to 550, we could hit that if we have a head and shoulders that has a perfectly sideways head. Okay, so this shape here is perfectly sideways. If that happens, then that could be more bullish. But that's not a guarantee. We may have just a smaller head and a smaller shoulder. So typically, this is what I would remind that when you have a head and shoulders, you could actually have two overlapping. So there'll be a small one first that will have a breakout to there. And then what will happen, I'll change the color. We'll have a new head and shoulders. We'll have one here. And this whole thing could be the head, followed by another shoulder. And now a bigger neckline, bigger head, going all the way back up even to 550, even maybe 600 again for Binance coin. Let's move on. Let's go to Cardano. I know a lot of people talk about this one. We can see, as I've been saying, when we have a sharp decline, we expect a sharp move back up. A sharp move higher, sharp move lower. If it goes up slowly, it's less likely to have a decline. So, it's just basically people profit taking, or people being greedy when people are fearful, or fearful when people are greedy when they're smart. Okay, so they'll move it back when they see that opportunity. And I like to be the little fish underneath the whale. I go with the flow and I see what the big boys are doing, and then I will just copy them, right? So the point is, when they move, they push the price down. When I move, I don't. So retail traders, by the way, they don't really influence too much their decision making, as much as people may think. Just you focus on yourself, because you may be tempted to make crazy moves thinking you know what the whales are doing. Don't try to guess what the whales are doing. Just watch this analysis, realize where the neckline is. If it can break the neckline, we could see 2.00 for Cardano. We would have to break this neckline. I'm going to draw it. It's exactly here. So let's now zoom in on that. Actually, let me clear this. I'm going to draw it. I'm going to zoom in. Let's go 15 minute. Get it perfect here. On the 15 minute, if I draw the neckline, we need to cross over this line to be extremely bullish. Because what's going to happen is, this is your price for suffering through this. If you held on, you will be rewarded if it can break the neckline by a much larger amount. It's off the charts. Okay, so now what I'm going to have to do is scrunch this together And actually, I got a black line up here for some reason I drew in the past, which tells me that's my target, 2.4. Okay, by the time we would break that, we'd probably hit just under, maybe 2.3 to 5. Let's just call it safely. So that is possible. And let's see, is that even an all-time high? Not quite. All-time high, I'm going to put a line in, horizontal here. That's definitely going to be resistance. Look at that confluence. So I do see a couple targets here. If we can break this head and shoulders, we've now created the right shoulder even. Perhaps right now I'm quite in favor of the bullish, that we will at least get to the neckline, aka this black 200 period moving average on the 15-minute candles. At that point, it's going to struggle, decide what it wants to do, either go down or cross that line. If it can successfully cross above that yellow line, which is the neckline of this head and shoulders upside down version, we're going all the way up. So there's in the path of resistance is only going to be 2 lines, which are here, number 1 and number 2. So those will be 1.99 and 2.2. Let's put that right in the middle, actually. 2.2, yeah. 2.22 and 1.99 along the path to 2.45 is reasonable. If we can break that yellow line, currently it is sitting at 187 and slightly rising, depending how long this takes. Between 187 and 190 is this yellow line that we need to cross above to be release the hounds, like, you know, out of the gates. Okay. So I do favor the bulls here. And right this current moment, this is a shorter time frame, so this is going to come down and reset, but that's normal. You're probably watching the recording of this, so I'm going to zoom out to the 4-hour candles and see, okay, not bad. Okay, we got RSI is very low. That is great at 35. It can easily go up to 50. It deserves a green line, so you're not confused. Okay. Also, this is somewhat neutral stochastic. That's not wonderful. It looks like we're not out of the gates yet. I would like to see this MACD slow its momentum and go sideways, right, before it can start heading back up again. So that could happen right now. It's not a guarantee. I got some green lines over here. Let's see where they are, because they're going to give me the final say what I think about Cardano. And we have them at 1.31 is a great floor. 1.21 is another one. And I'm actually going to put a higher one. Let's put one in here. Let's make it green. All right. So that's at, what is it? 147, 148. So that's not bad. It's near this black line, the 200 period moving average on the 4-hour candles. And you can see I'm expecting this to fluctuate within this range still. And what it deserves quickly before we run off is a Fibonacci. Let's go from top to bottom, since this is such a clear cut drop. And then we got our targets. I'm going to use ignoring this major wick and just have a look at what do we see here. What are the numbers? So we can see here. Let me just move this over so you can see it. I'm going to use the body of the candles, and the body of the candles is here. All right, so we got 38% Fibonacci, one of my favorites. 1.836 for Cardano is my target. 1.836 for Cardano, followed by 195. Okay, those would be my targets. I would be exiting. Yeah, those are quite reasonable, actually. But then what I'm going to do is quickly put in another Fibonacci. I'm going to use the wicks this time. And I'm going to put them in all the way to the bottom one, which I need to fit on the screen first. And what do we got? This time we've got 1.52 and 170. Okay, those are also important levels and important targets. Okay, so that's what we got for Cardano. Currently it's at 155. So DOT, actually, did we look at the lower indicators?
We can probably do, DOT will probably be the last one.
All right, sounds good. Yeah, have a look also if there's any questions. But yeah, these are absolutely, as we can see, remember what we said, free money when it's outside the lower Bollinger Bands. It is quite low at or near the bottom, if not below it right now. Plenty of room to the upside, plenty of hope here near this middle of this Bollinger Band. So this blue background here, you can see that range here is where we're at. The middle is the 20 moving average. Just to get back to the middle Bollinger Band is coinciding with all three moving averages on these 4-hour candles. So that's reasonable, okay? Very doable. $36 for DOT is doable. This is all helping with the RSI in this way oversold territory. But when disclaimer, watch the news. I've been pinpointing with Elon Musk talking about Dogecoin all the way up and all the way down, riding that wave. So, this is important to watch. So definitely, that's all I want to say. And just say this, I myself am doing, mentorship. I'm going to be showing you how to get it for free because I need some testimonials of people getting actual correct results with our analysis and with our education. We don't do analysis, we do education. So definitely 100%, no obligation. You can book a free trial with me. I just added some time to my calendar. You just got to go robertpaddock.com. Please do that because the spots will fill up fast. I used to charge thousands for teaching. This is a way to come in and get a no obligation one-on-one with me, free education, mentorship from myself rather. And go ahead, check out robertpaddock.com. Just click 60-minute meeting, book with me, do it right now before everyone else does. And, first come, first serve. So this is something I don't typically do, but I want to get some testimonials here going for us of people winning in our community so we can use that in the future. Please do that right now. And Ed, maybe you can share with how they can get a hold of our future meetings. I do want to announce a quick kind of a VIP only event for some of the people watching this to come on Saturday. I'm thinking of now launching Saturdays. So if you're interested, type in the chat what time works for you the best. Is it 12 noon, 1 p.m. Pacific, 2 p.m. Pacific, or 3 p.m. Pacific? Again, that's 12 to 3 Pacific. I'm picking which time is the best for Saturdays. Type in the chat right now so I can have a look what time works for most people here. And also, if you're watching the recording, you can also type what time works for you. So thanks, Ed, for your chance to, share some of the charts. I didn't have much time to cover even explanations why I see things, but I will be doing that on the next Saturday and even Wednesday. I will be going in more depth with more coins and more explanations so that you too can be, become a profitable trader like the pros and confident in your decision-making ability. So thank you, Ed, for your ability for letting me share this. We had a crazy, from the peaks, we've dropped 50%. And when I had said 7 days ago that we're going to see in the next 3 or 4 weeks, a drop of 30 to 50%, I wasn't sure it would happen in the first week. I gave it some room to breathe. But because it happened in 1 week, I got to now favor the bulls. That was a little bit too fast.
All right. Yeah. Thanks, Robert, for just giving us a quick, rapid fire update on how different coins are going and where you think they could go. And so just for next steps, we will have another general session in 2 weeks. So be sure to sign up to continue to be within a supportive community. We also have a community group. This is for those who want to get deeper into trading. You want to learn more. You want to be more than just a hodler. You want to trade. You want to learn how to profit on the way up and down in the crypto market. So Robert and I, we do run a group called Crypto Trading. So you can see Robert's right here. He's right. So this is the community you want to be part of if you want to get our analysis in between the meetings, because if you wait for until the next meeting to see analysis, it may be a bit too late already.
Yeah.
And as you saw, Robert was showing one of his analysis he did at the last meeting, right? And how it became true, how he predicted the price would go down and everything fell down, right down to the dot of that target market. And if you want to get more heads up, right, this is the community you want to be part of. So that is Facebook book.com. I'm just going to share it here.
Yeah, let's
for
share
everybody.
that. And I'm also going to share my link to book with
Yeah.
me a free hour
Yeah.
because you don't want to mess up that opportunity. And definitely, if you join this crypto trading Facebook group, you will be able to stay on top of all future events.